Hey, this is Steve Freeman, your serious about sold realtor with eXp Realty. I'm here today with Sam Beck with Lawson & Beck. They're one of my go-to attorneys. Not that I discriminate against other attorneys in the area. They're just kind of my preferred one. I've known Gary since he came out and became his own practice. So Sam, today I want to talk a lot about title insurance. It's kind of the one that it's an uncomfortable creature in the room a lot of times, and I'm emphatic about it. So let's kind of discuss what it really is.
And the other issue too is that a lot of borrowers don't understand what title insurance actually is and what it is that they're actually purchasing. Right. So title insurance, as Steve well knows, it's a one-time charge that goes to the title insurance company. Here at Lawson & Beck, we utilize Chicago Title Insurance Company. It's a nationwide company. Basically, the title insurance is a one-time charge to the borrowers. It covers them for the entire time they own the particular property that they're buying. It's the cheapest insurance, in my opinion, that your money can buy. Usually with lenders requiring you to put 20% down or more. In the case of FHA loans, it could be less than that, but let's just 20% down or more, and you buy title insurance at the closing table, you've instantly covered yourself your thousands of dollars that you've spent in order as a down payment.
The equity. And it also covers the future in equity as well, correct?
It does. So we here at Lawson & Beck, we utilize what are called enhanced title insurance policies. And what that means is that it covers up to 125% of the value of the property as of the date of purchase. Right. So for instance, if you're buying a $100,000 piece of property and you purchase enhanced title insurance coverage, you will be covered up to $125,000 worth of equity. It's designed to protect the equity that you build over time in a piece of property.
And I think you just said it best too, and this is what we just talked about, was, it's a one-time cost. You pay it one time up front, and it covers you for the life of the time that you own it, and even beyond when you own it, because if something ever comes back, it goes back down the trail.
Yes.
It'll cover backwards. It covers things like property boundary disputes.
Correct.
I think every single buyer that I have should have it. And this is what I was telling you, and I tell them: if it wasn't an important thing, the lenders would not require it. Mm-hmm. And the lenders require it on every single transaction.
They do.
They don't require us to do surveys, septics, termite letters, well letters. They don't require that. Some VAs do, but they are so emphatic about this that they require it on every loan, no matter what.
Correct. And so at a closing, you will see on a settlement statement, you'll see a lender's title insurance policy and an owner's title insurance policy. And a lot of people get confused as to what those items actually cover. So a lender's title insurance policy protects the lender. It does not protect the buyer, right. Does not protect the borrower. It protects the lender only. And it protects the lender up to the amount of the mortgage that they have on the piece of property. So for instance, go back to the $100,000 example. If you're putting 20% down, you have $80,000 loan, the lender's policy will be valued up to $80,000.
Correct.
It has no protections afforded to the borrower at all.
No.
And so the lender's policy will cover the lender in the event there is a title problem or a title claim against the property. But if the borrower elects not to purchase title insurance at the closing, the borrower is left to his or her own devices to make to defend the claim and to go to court, pay to the attorney, and pay any damages that may result from any kind of claim that's made against the property.
So in full transparency, you guys make some money off of this. There are two different, like you said, there's
Let me
two
step back on that, Steve. So yes,
and you're limited too, right?
We do make.
Yes.
We do. The law firm does earn a portion of that premium, but and I make sure I tell people that at the closing table.
You do,
but the reason we earn a portion of that premium is that my law firm is also liable in the event there is a title claim. So basically we use third-party title examiners. They're insured examiners. They have E&O coverage. We order title. When we get a file, we immediately send the file over to the title examiner to order the title and to provide us with what we call a title abstract, right? We review that title abstract, and as far as we can tell, if that property is clear, there's no liens or judgments or encumbrances or anything like that on there, we give the go-ahead and the property proceeds to closing. Now, title insurance will cover a defective record. Right. So there have been times where title examiners are known to miss.
This is great, and this is what I want to talk about, some of the things that the title examiner cannot see.
Well, and we get a lot of time, people come in and go, I don't understand why I need title insurance. Didn't you do a title exam? And I say, yes, we did do a title exam, but that should not negate you purchasing title insurance here
Missing
today.
heirs.
Correct.
Forgeries, things like that somebody looking at a piece of paper would not be, an examiner would not be able to see that.
Yeah, the three biggest items I tell people about. I mean, most people hear the example of the Indian burial ground being, underneath the piece of property. I've personally never seen that happen. Now, I've heard of it happening. I've heard of what we call complete failures of title, where the person that owns this piece of property, or purportedly owns this piece of property, actually does not have title to it at all. Right. Now, those situations do pop up. They are rare, though. And I've seen where title insurance will cover a defective record, where it wasn't indexed properly by the court, by the clerk's office, or it wasn't associated in the title exam. But what we mainly see it used for are things like are hidden defects. So things like Steve was just saying, probate's not handled correctly, divorces not handled correctly, liens being filed on a piece of property, and then forgeries, right? And we've seen examples where one person just signs the name of another person as the closing attorney. I don't know what that person's signature looks like. As far as I can tell, it's a valid deed.
They could walk in here with a fake ID as well.
Exactly.
I mean, if they're forgery and it's just fraud, I mean, it's not going to be on the surface. It's going to be very deep.
Correct. It's not something that we would be able to see. It would not show up in a title exam, and that would be something that would be covered by title insurance.
Correct.
And more often than not, a lot of times where I see title insurance, Steve and I talked about it. I mean, it's almost like catastrophic insurance, right? If you have it, the likelihood that you'll ever need it is pretty small. But if you do need it, it's bad, right? I mean, and the situation is bad, right? We just did a closing a couple of weeks ago where there was a problem in the chain 3 or 4 links back, and it was we needed a corrective deed out of the seller of the seller of the seller. And we weren't able to track that person down. We had no contact information for that person. We didn't know where that person might even be. And so because the person selling had title insurance from when they bought the property, we were able to insure over that with the title insurance policy, and the closing was able to proceed accordingly. But had he not had title insurance when he went to sell the property, he would have been involved in a 6-month to 18-month, 2-year lawsuit there at thousands of dollars cost to him.
So let's talk about a couple of things. So you mentioned it, and we'll kind of go backwards. So there is an owner, there's a lender title insurance charge.
Correct.
There's an owner charge.
Correct.
And they're issued simultaneously.
Correct.
So if they don't elect to do it at the closing, if they wait 30 days later, they can still get it, but there's more costs associated with it because you got to go do another title exam.
Correct.
And then if they elect not to do it at all, it sometimes pushes that lender title up as well, correct? Because there's some affiliated costs that are shared at that
Correct.
point.
So there's the simultaneous issue rate.
Yes.
And I believe off the top of my head, if you're purchasing owners and lenders title insurance at the same time, the lender's policy is about $150, I believe, right? Yeah. And then the owner's policy is what is established by the rate tables by the title insurance companies. If you don't purchase lenders and owners at the same time, and you were to decline owner's title insurance at the closing, which is at the borrower is absolutely right. I wouldn't suggest it, but the borrower has the right to do that. The $150 simultaneous issue rate is no longer available, and the lender's title insurance policy goes up by several $100s.
And then also I see this a lot too, because we have a lot of cash buyers in our market, that the cash buyers always look down at that title insurance, and they're always shocked by that number because it's a lot higher than what they're used to if they had gotten a loan. And the same thing is the same principles in effect. There's no lender insurance at that point, so they're covering everything. They're covering all the
full amount of the equity as of that day at the closing table. Correct.
So, and that's why a lot of times it is some sticker shock to that.
Exactly.
I don't know. Is there anything else that we really didn't come? This is a great video because there's a lot of information in this one. So I apologize for the length, but it's worth it.
Yeah, just trying to think. Yeah, I mean, on a cash deal, we see those a lot. I always advise, whether you're getting a loan or you're paying cash for a piece of property, to purchase owner's title insurance. And I always tell people, even if I had to close at a different law firm and not here at my office on my personal properties, I would be buying title insurance there because it's so
cheap for that one.
It's so cheap. I mean, and again, they're established by the rate tables by the title insurance companies. But a $250,000 piece of property on a cash deal may cost you $1,200 for owner's title insurance
versus losing $200.
And you pay $1,200 at the closing table. In the likelihood, hopefully you never need it. But if you do need it, I mean, you've got $250,000 worth of protection as of the date of closing,
for $1,200.
And it prevents. And people say I want to purchase title insurance to make sure the title's clear. That's not what title insurance does, right? Title insurance does not ensure that the title is clear. It just says if it's not clear, if there is some kind of issue that pops up, Chicago Title Insurance Company would be on the hook for paying that claim. And not only paying that claim, but hiring attorneys, paying attorneys' fees and costs and expenses and court costs and
restitutions,
those all that kind of stuff. Yeah, so it's not necessarily just used in a situation where there's a complete failure of title. Let's say if somebody is coming in and saying, I say, hey, Steve, I own your piece of property. It actually belongs to me. And Steve has title insurance. He just turns it over to the insurance company, and the insurance company and my lawyer fight it out as to who owns the property. And if it is ultimately decided that the property belongs to me, the title insurance company pays Steve the equity that he has in his property. If it's ultimately decided that my claim is not valid and that Steve is the owner, the rightful owner of this piece of property, I go away, but Steve has not come out of pocket anything because he has not had to pay tens of thousands of dollars in attorney's fees and expenses.
For the $1,200.
Correct. So the $1,200 has saved him thousands of dollars in fees and costs, plus it's protected the equity that he has in that property to begin with. Now, the other example would be a $1,200 or unless a $3,000 lien comes on, a materialman comes after the closing and says, hey, I have a $3,000 lien on this piece of property. Title insurance company is on the hook for that. They just pay the materialman the $3,000 to go away, and the property is cleared up that way.
Perfect. All right, well, we've bombarded you with a lot of information. I want to thank you, Sam, for sitting with us today. Sam Beck, Lawson Beck, they're both in Peachtree City and Newnan now, so I can't recommend them enough. They're always good people to us. After hours, sometimes they'll stay for us. They kind of go the extra mile for us because we try to go the extra mile for them as well. So again, Steve Freeman, I'm with Sam Beck. Thanks a lot, and we'll see you on the next one.